We'll go to Saira Malik. She's Chief Investment Officer at Nuveen. Saira, thanks for joining us. And what's your knee-jerk reaction here to what you've heard?
I'm not surprised to see Powell generally stay the course because payrolls was one data point, but until the March meeting, we have 2 more CPI prints and another payroll print. The question isn't about the 25 basis point hike in March. It's how many hikes do we have after that? I see 2 risks going forward. One is the rally that we've seen in high beta stocks. I think that's disconnected from economic reality. I would expect that to unwind. And secondarily is, even when we do eventually get that Fed pause, what does a pivot mean? It could mean 2 things. One is we're in a recession and eventually we go to rate cuts. But if they pause and the impact of monetary tightening doesn't get inflation to 2%, they could eventually start hiking again. And then we eventually hit our recession. I don't think the market is pricing in all of those scenarios yet.
All right. Steve Liesman has made his way over. Steve, what are the big takeaways
for you?
Well,
he ended 11 minutes early.
Can you believe
my
that?
fault. I don't know. I had
he
a lot
left
more
time on the
questions
table.
for
Yeah.
I think that finally, Powell kind of went out of his way to say, or to answer a question that Rubenstein never even asked, which is that if it gets worse, what will you do? Originally, there was a very dovish take on what Powell was saying. He did not go out of his way to say, if this kind of strong jobs market continues, we're going to have to do more.
Right.
Which would have echoed what Kashkari, Daly, and Barkin have said. Then he sort of did it. I don't know if we have the SOT cut, guys. I don't know, but what I can tell you, he said, look, if this, we don't have it. Okay, so if this, and it's so early, they didn't have time in the back. But if this kind of jobs numbers continue, if inflation does not come down, then we will do more. And I don't know if that's the moment. If you guys could put the tick up, if that's the moment you had that reversal.
Yes.
So the question is, what do you do with that? I think the expectation among a lot of folks is that this jobs number we had for January was anomalous in its size, but perhaps not in its direction.
Sure.
And its overall sense of it being still a strong jobs market. The question is whether or not you read through the lines of what Chair Powell is saying, and is he feeling this disconnect between the job market and inflation? Because we had the wages come down a bit, we've had inflation coming down, and yet you have this very strong unemployment, very low unemployment rate, and very strong job market. How much is he willing to go with that? And not very much yet, it appears.
A couple of additional observations. Number one, he didn't seem perturbed by much. He seemed very relaxed. Am I wrong?
He's a cool character. He's been very cool throughout this. That is true.
But he didn't seem, and Saira, I'll ask this to you as well, he didn't seem like he was coming there to set the record straight and everyone misinterpreted what I said last Wednesday. And now, Saira, I didn't get that vibe at all. And I forget who it was on this show a couple days ago who said the biggest problem was his disposition last Wednesday.
That was Lindsay yesterday.
Too relaxed. Was that what Larry Lindsay said?
Larry said he was too relaxed.
I can imagine Larry is not happy with the tone. Again, I'm not sure that this is necessarily the wrong note to be striking, Saira, but what do you think?
I think we've seen this movie before. Often Powell makes these comments at the FOMC. The market takes it from a dovish point of view. Then we see other Fed speakers come out and basically talk down expectations, become more hawkish. A week later, I didn't expect him to do anything different than he did last week. The issue for the markets is that we just haven't seen the impacts of monetary tightening yet, so we don't know what that means. I think it can mean a few things. One thing I'm worried about is earnings growth. Really, revenues are expected to grow high single digits this year. Revenue growth has been so much based on pricing power. And with inflation falling as significantly as it is, if companies need to reduce their prices, I think that collapses the earnings growth story. That's one issue I'm worried about.
Sure.
Secondarily, most of the rally in January was based on lower yields. So if we can't rely on yields remaining low going forward or continuing to decline, I think that rally may run out of steam.